Should we go through how one would pick a property, GC?
That's what we titled the show.
If you look at this sheet on the same tab that we were just at, you can see these properties. There's a rate of return. There is the initial investment you need to get into each one of them. And then you have here the cash flow, right? The net rental income.
A little bit to the left, we also show the monthly cash flow right off the bat too. So we're able to see both the cash flow year one, which is column L, and then year two is the cash flow over the full horizon, the full 10-year hold.
Got it. So I got all these properties in front of me. GC, how do I even start here?
Well, the first thing that we're going to do is we're going to follow that criteria. We're going to look for the highest rate of return properties. But before we do that though, we're going to take a look and see what we see on the 10-year hold cash flow. Okay? Because what we're looking at is these properties are assumed that we're putting 25% down. But the reason why we don't start with budget first when it comes to rental properties is because the budget might be affected based on if we can put less down and still be positively cash flowing. So when we look at column U and we look at the net rental income or the cash flow over the full 10 years, if we start to see really high numbers like 10,000, 30,000, some types of those numbers, we're going to do an extra step here and see if it's possible for us to get positive cash flow by only putting 20% down.
Got it.
And this is what your financial engineering partner can do with you, whether that's JWB, whether that's a real estate agent or another turnkey company, or whether that's yourself. We need to be constantly thinking of ourselves as a financial engineer. And just because we see high cash flow over here, we need to understand the relationship between cash flow and returns. If we have a lot of cash flow, that's a good thing. But what that means to me is that we might be able to put less money down, reduce our cash flow, and actually increase our return on investment. So there's a little bit of a shift there. It's not all about maximizing cash flow. There's an inverse relationship between cash flow and return on investment many times.
So if I'm looking at this for the first time, it seems overwhelming, but I can tell that JWB has a system to do this, and I just want JWB to do it for me, right? I'm a part of Fortune Builders. One of the big reasons I joined Fortune Builders is for them to introduce me to partners that can do this kind of thing for me, and I want this kind of analysis done for myself. What should I do?
You should call JWB. But this is the type of thing that we do for every client coming into investing in rental properties, especially with JWB. We're going to sit down, we're going to go over your goals, and we're going to go through this exact same process with you. We're going to align your goals with the resources that you have and then the assets that we can put into your portfolio. So this is showing you how the sausage is made. If you want it done for you, get on the phone with JWB and we'll be able to build this customized plan for you.